Let's bring in Justin Kuczmarski. He's the president of NAV Valuation and Advisory. Justin, welcome to the program. The shock and awe of these tariffs that threw markets into major turmoil back in spring, back in April, we're not seeing that on Wall Street anymore. Does this reflect a shift in investor reaction?
I think it's a fundamental question. I think investors, because they've been pushed off several times, have become sort of muted to the possibility of tariffs. But I think right now, in the next 45 days, according to the deadline of August 1st, is really the key time, because you have the earnings for the second quarter that will come in the next 3 weeks, big tech coming in the next 2 weeks. And I think investors will get a sense of earnings. I think earnings are a double-edged sword. If they're good, people will look past the impact of tariffs. But if they are bad, and the effects of tariffs are cited in these second Q reports from leading companies, particularly big tech, that are always sensitive to rate changes, I think the markets could be in for a wait and see. We have not seen the full effects of the tariff because the deadline hasn't really been enforced yet, but most importantly, it hasn't shown up in earnings yet. I think that the key question is watching earnings in the next 45 days.
Interesting. And of course, a lot can happen between now and August 1st. Let's turn to corporate news. And Nvidia becoming the first company ever to reach a $4 trillion market valuation. Boy, you're a lucky guy if you've got some of those stocks.
I think when you look at Nvidia, it's what it's done to itself and repositioned itself in the past 15 years, betting on going away from just being a GPU processor. It's a great American success story. It's countering a lot of the challenges that all the tech companies, particularly chip companies like Intel, have had over the years. But when you look at the demand, it's totally insatiable. It has become an American asset. It is a direct competitor to Huawei, obviously in China, which is privately held. But I think the demand, particularly on energy storage, people want to talk about computing power for AI, but storage in terms of powering the next generation of computing and all the advances to come, storage and energy storage is something that lends itself to a B2B side of Nvidia and other tech companies that will fuel this, particularly cloud infrastructure stocks, that will fuel this growth in AI and the supporting systems that will accompany the growth in energy to power AI needs.
Yeah, it was really a big week for tech fueled by AI sector. Which companies, Justin, in your opinion, are taking the lead? And of course, Goldman Sachs is now joining the boom.
I think when you look at Microsoft with its B2B and B2C components, obviously Nvidia, but I think Microsoft is one to really look at because they're really playing in multiple areas. Their Copilot is doing well. They have the services. They have obviously different components of their business model, and they moved into the cloud. I think it's diversified as much as tech can be. I mean, we look at Alphabet, it's really reliant upon advertising. You look at Apple, hardware plays a major factor in how tariffs will play into the price of iPhones in the months ahead. But if you look at Microsoft, it's been around, it's been dominant for many years, but kudos to Microsoft for really diversifying into strong B2B and B2C service lines. I think they're well positioned. They have multiple service lines that can benefit in all economic environments.
Let's move to the rise of the cryptocurrencies. Boy, Bitcoin reaching record highs this week, Justin. So what is behind that? And talk about how all the trade and tariff uncertainty plays into it.
I think this is the ultimate thesis that Bitcoin's been pitching to us and Bitcoin investors for the past 20 years, particularly in the past 10. It is a store of value. The Bitcoin activists will say that it's a store of value because we've been off the gold standard for 50 years and it's a better hedge against inflation and loose monetary policies than gold. But right now, I think the key thing is, can Bitcoin go from approximately 100,000 to 200,000, 250,000? That really is the key shift in the next few years. Will it be a store of value, or will it be something that will not be benefiting? My opinion is the institutional and retail push, particularly in ETFs, bodes well as a store of value. What the future price would be, it's probably the most volatile asset class around. Could it go down 50%? Sure, but it definitely has a narrative, particularly all the pushes by ETF and retail investors in the past 18 months with different vehicles.
And I got to ask you about my producer's favorite story of the week, Italian Nutella maker Ferrero striking a $3 billion deal to take over a cereal giant, Kellogg. Not the healthiest deal when we're talking about nutrition, but certainly when it comes to money, a big one. What does it signal in terms of consumer trends?
I think when you look at Kellogg, it's always been a staple brand, Nutella, different part of the food, but obviously established player. Consumer staples are really a good position right now. They've been, sort of underlooked because obviously tech in the past year, the past 3 years has been on fire, up 50 to 100%. But consumer staples, particularly utilities, look how utilities performed this year. Companies that throw off cash, particularly consumer staples, will perform in all markets. So I think and consumers could really take a close look at index funds and the top performers in the S&P 500 that are consumer staples that throw off a lot of cash. It's not a bad play, particularly in the next 45 days where the market's going to have some gyrations, whether we like it or not.